morning, everyone. I hope you're all doing very well. Here we have another market update. Just kind of capitalizing or kind of recapping on the price action last night following the FOMC Open Market Committee's February meeting. Now, of course, we did have incredible volatility between kind of 7:30 and last night's close between 9 o'clock or so. We have seen a little bit of a consolidation into obviously the session close and into the into the Asia session, should I say, with some volatility this morning, obviously in the UK. Now today, of course, we do have Bank of England, we do have ECB. So firstly, I suppose we can start by kind of recapping on what happened last night. So of course, policy statement came out. Overall, it was quite hawkish approach, but obviously market participants, institutions, market makers, liquidity providers, you name it, they have pushed those markets up. So that kind of continued, that kind of buy-in that we saw in the indices through after the NFP kind of into obviously yesterday, very much continued. And we're really seeing the indices start off February with another bump to the upside. Now, whether that remains seen, whether that can sustain into the end of the week, only time will tell, because of course you do tend to see the odd potential for reversals, particularly when BOE and ECB are the following day. So the goal here broadly is just to reflect on the price action, being able to digest the moves with a sense of calm, and then being able to put a bit of a logic on things as well. So of course today at 12 o'clock we do have Bank of England. So we've got the Bank of England minutes, we have the monetary report, we'll have the vote as well. So it's all important here when it comes to the BOE at 12 o'clock. We break down the vote. So obviously 7 members are looking to hike, 2 are expected to remain unchanged. And of course, we did put out that infographic into our Discord in the institutional channel, so people can see who's the hawks and who's the doves, etc. in that regard. And then of course later on today we do have the ECB. So then the ECB policy statement is going to come out at 1:15, followed by Lagarde speaking at 1:44. So we're really expecting the volatility to ramp up now between kind of 12 o'clock and really till about after 3 o'clock. And the reason why that is the case is because you've got Bank of England on one hand, you then have the ECB, we then have US data, we then have the press conference from the ECB, and then, of course, then we have the session open with factory orders at 3 o'clock in the US. So it's going to be a volatile, busy 2 or 3 days in the markets. So it really just comes down to, I suppose, now just reconciling, understanding, having a clear plan of attack, because we've seen guys yesterday making a lot of money, but we've also seen guys losing a lot of money. And I think that's why it's important that the risk reward becomes extra paramount during times of volatility. You saw it last night at 7 o'clock. There was a little bit of slippage in the markets. We did advise that. We actually gave that warning out beforehand, so people were aware of the volatility, the pending volatility that was coming, just so they were aware of the position sizing, just in case there was slippage, just in case they were on the wrong side of the potentially the market bias. And that's uniquely kind of very, very important as well, just to making sure that there's a sustainable plan. There's obviously a clear emphasis on risk management, not how much money you can win, but can you incrementally and stably grow that account. And that's kind of what any prop firm would look for in profitable traders. All right. Now, as we looked obviously today, as I said, 12 to 3 is going to be a very, very busy afternoon for the US. And then, of course, tomorrow we do have NFP, but we will be doing a separate video for NFP tomorrow and treating that in its own regard. So I suppose if we look at kind of the price action, where was the price action being overnight? Well, of course, from 7 o'clock last night, very, very clear decline in the dollar, right? So what does that assimilate into the price action? Well, generally speaking, when you have a weaker dollar, you generally have upside in risk assets. So the likes of gold will progress to the upside. The indices, the stock market indices, both Europe and the US will progress to the upside. Your FX pairs, Euro USD, GBP USD, AUD USD, which we have here, all of them will progress to the upside. So it's, of course, understanding the linear correlation between these asset classes is also very important, because if you're starting to see a shift in sentiment or a change in dynamics, then you know, well, what do I need to buy? What do I need to sell? And uniquely, that's very, very important, because that's how you make money. That's how you make money, by understanding the correlations as well. So rather than potentially being caught on the wrong side, you know, maybe to cut it, go the other way, and then being able to reflect on that as well. So if we very, very quickly look at the FX pairs, just excuse me for a second, you will see that the euro dollar had a massive run up yesterday. So around about 108.50 was kind of the bottom last night, or yesterday, sorry, into the open. We did get that little bit of buying back into 7 o'clock. But once 7 o'clock came out, and more broadly, once 7:30 came out, we had that massive break to the upside and euro dollar into 110s. And 110s was a very, very clear dynamic, because, of course, in the scenario analysis that we posted earlier in the week, by the ING article, they had said that if it's going to be a dovish move, you're looking for Euro USD into 110. And as a result, that's exactly what happened. Market participation, very, very bullish run up in euro dollar, and the price action overnight got to that 110 level. A very, very clear move. So now it'll be interesting to see whether those highs sustain, or the likelihood is, do we get a bit of profit taking and coming back into this range? Well, now probably at this point in time, given we've broken out, given profit taking looks to be cementing into the markets, the probability is you're probably going to get some sort of correction. Now, how deep that correction is going to take place is going to be interesting, but that's where I suppose the next couple of hours of price action in the markets is uniquely going to be very, very important. Okay. And obviously having a clear kind of focus on what you're looking for, but also in terms of the risk reward as well. That's very, very, very important. Now, of course, GBP USD. What has GBP USD done yesterday? Well, of course, we were trading kind of around lows underneath 123. We did get that very, very clear bump and run back up into 124. However, on the lower time frames this morning, you will see that cable strength has very, very quickly evaporated, and pound pairs seem to be on the little bit of a back foot. Okay, fairly decent sell off this morning from 124s all the way back into kind of low 123. So there's about a 70-point sell off really since very, very early this morning, since the London Open, or just marginally before it. Now, if we look at the Aussie pairs has been a very, very strong correlation metric with gold, because if you look at gold, you look at the Aussie, very, very clear assimilations and upside, and you'll see for the first time gold is actually broken above that weekly level we talked about last week at 1947. We'd come all the way back to 1900, got back into this, mitigate this area of liquidity here, but of course last night, very, very clear impulse, taking of highs, these equal highs here, breaking of structure to the upside, and cementing new highs up at 1954. So the logical scenario is now it'll be a case of, well, does the market bias sustain above this kind of 47 to 50 level, or do we see profit taking coming back into play into these kind of low 30s to where last night's move originated from? And that's going to be important for the next stage of price action for those who are, let's say, shorter time frame traders, or maybe day traders in that regard as well. All right. And of course, then if you look at Aussie, very, very similar move, very, very clear bullish trend. And I have no indicators, just raw price action, just very, very quickly. You can see very, very clear bullish trend, continuous new highs being created. And of course, last night, very, very clear new high again. And after we've made those highs at 71.50, we're starting to see profit taking coming back in. So the likelihood is you're probably going to get a correction in the Aussie as well, back into some of these levels. If you do start to see gold falter here at 17.50, back underneath 47s, then you're probably going to see the Aussie come back. You're going to see profit taking in the cable again, undoing a lot of that move from last night. And of course, euro dollar, you're probably going to see euro dollar back into kind of 108.50, 109 as ideal levels to look at. Now, indices, where are we at in indices? Well, the indices has had a massive run up yesterday. Okay, so this is kind of the trend since the NFP and the S&Ps. Very, very clear bullish trend, continually creating new higher highs, very, very clear structure to the upside. And then, of course, last night, very, very clear run up and almost stopped dead in its tracks. You can see, where did it stop? At these local highs. Now, structurally speaking, you will see that it has technically broken through it temporarily. So if you go down to the lower time frames, the 1 minute, the 3 minutes, the 5 minutes last night, you would have actually seen the S&P trade at around about 41, 49. However, since then, market participation overnight has been still fairly consolidated at this region. So now the next course of attack today is, do we see evaporation in this buy-in that we saw from last night and of course from Monday or Tuesday, and start to see a little bit of profit taking back into some of these regions, or what's the next course of action? Because of course now it's do or die really up here around that 4140, 4150 level to see whether the indices, the S&P continues to progress higher, or whether we start to see that little bit of profit taking, this trend that we've seen develop over the last, let's say, 3 weeks of highs into lows, highs into lows, highs into lows, highs potentially into another low, see whether that continues or not. And I suppose your break of 41.22, 41.25 is probably going to be clarification of that, because of course, if we take out these lows, you're probably going to get one last sweep, and then you're probably going to get a decline back into some of these levels. So that'll be an interesting narrative to watch out for during BOE and ECB within the price action, to see, is the narratives posed by those banks, institutions, the catalyst, because of course we can start to see within the physical price action that the momentum is starting to slow down. So it'll be interesting to see whether those markets continue ramping up. And that, of course, is the same with the Nasdaq, right? Nasdaq yesterday, we talked about this 12,800 level for the last week or so, on the higher time frames, and even kind of more broadly between kind of 12.6 and 12.8. Of course, last night, very, very clear run up through the December highs where the previous interest rate meeting was. Very, very clear run up, and you're starting to see this kind of double bottom, broader kind of correctional bottom starting to play in at this area down here. Now, of course, I think this area here at 11/8 or 12/8, should I say, is going to be uniquely quite important this week because, of course, today we've Bank of England, we've ECB, we've Apple, Amazon, Google earnings tonight at 9 o'clock, which, of course, we've talked about and we've sent out the links with slick charts previously to look at those weighted compositions, particularly within the Nasdaq. So if those three stocks perform well tonight, you're going to see the Nasdaq outperform. You're going to see the Nasdaq push higher. So it's important to look at that dynamic. And then, of course, tomorrow we've got NFP. So where does that leave the markets into Friday's close? I think that's going to be the big thing. Is there's a lot of information to come out. There's a lot of data. There's a lot of time left in the week for markets to change. And I suppose evaluating where Friday's close is going to probably just as important as where the price action is currently trading at. And that is something that I would obviously recommend people to look at into the weekend. Now, of course, if you look at Dow Jones, Wall Street, I actually had bids in here, offers in here last night, should I say, sorry, at 34,300, and it literally tagged the 34,300 to precise levels. Now, you've seen that very, very clear decline, obviously, in the middle of January. Why was that? Because of the financial earnings big miss in the financial earnings in terms of market reports and market earnings. We've had that gradual climb up back up over the last week or so, but a very, very clear reaction from 34,300. Now, again, today, I'm looking to see if there is any sort of reaction because, of course, we've tagged this 34,300 area over here very, very cleanly. Almost a turn on a sixpence back into this local area here. And that's where the price action is currently holding. So, of course, any break really above 34,100 is probably going to see price action try and fill this wick and try and ultimately break out. But at that point in time, if that happens, you're probably going to see broader indices move higher. So that's obviously a correlation. And if not, if we start to break under 34,000, and you're probably looking at a correction back into this area down here around 33,700. I think that's quite important as well. So that's kind of where the indices are pretty much in the markets broadly. As I said, Nasdaq is still trying to climb higher, somewhat still creating bullish order flow. As we said, S&P's is in a little bit of a stalemate up here around this key level. So Nasdaq has more to climb. The Dow Jones looks like it's extended fairly high into those levels. And the S&P is now a consolidation of key levels. So you might see the Nasdaq actually outperform the other two today in that regard. So it's worth kind of keeping an eye on that as well. Now, last but not least, if we progress to European indices, you will see the DAX, absolute tear, right? So where have we been all week? Well, we talked about it at the beginning of the week. 15,000, 15,200 has been where we've been located on the DAX. And of course, yesterday got that very, very clear breakout. Now, if we look at the shorter time frames for a second, you'll also see kind of consolidation because the markets were literally going sideways for the last kind of 2.5 weeks or so. But of course, yesterday on the FOMC, European indices went up in synchrony, in sympathy with it. And of course, upside played out very, very nicely. Very, very clear run up this morning into this 15,400 level. Now, of course, if you're looking at this broadly, I suppose 15,400 is a nice breakout out of this consolidation, but is some way away from really the next kind of key area. And the next key area is these kind of lower highs, which is around about 15,600, 15,700. So you're kind of midpoint between the breaking out of the previous consolidation and where the next kind of key price action level is. Now, if you look at shorter time frames, we bring back in kind of the liquidity kind of voids and fills and stuff like that. You've obviously got order blocks down here. Now, these are the absolute lows. You've got a decisional area here, and you've also got your kind of morning area this morning. So there's quite a big breakup this morning on the DAX at 7, 8 o'clock this morning in Europe. And you saw it in the FTSE. You'll see it in the Euro stocks now as well. But it'll be interesting to see, does the markets get back into these levels? So 280 is an interesting area. 120 becomes an interesting area. And those are kind of areas to watch price action at if we start to see a little bit of movement in the liquidity. It's all about liquidity in the markets. It's not necessarily always about the fundamentals. Look at the liquidity because that's what happened last night. The sentiment was fairly hawkish overall. If you look at the statement, it was fairly hawkish overall, but yet the markets drove it higher, right? So the liquidity is also very, very important in that regard as well. And this is the Euro stocks. Last but not least, in the European indices, 4,200 has technically broken out. However, we are coming back in. So it's kind of like a similar scenario, really. If you go down to the 1 hour charts, you'll see it there. Very similar kind of move to the DAX. You've got liquidity areas down here around 4,100. You've got another one just above 4,160. And we've obviously got an area here at 4,200, which was local highs for the last couple of weeks or so. Now, of course, if we look at the UK again, if you look at the broader narrative, the weekly area here at 78.15 is still holding relatively well. So pretty much FTSE is just back and forth, accumulating volume, not really going anywhere. It's fairly directionless. It's just up and down. Now, of course, yesterday we did get a little bit of a rump higher this morning and obviously last night. But of course, it still remained under that weekly level at 78.15. So I suppose that's going to be interesting to see if there is kind of a closure above this area. But at this moment in time, even on the short-term timeframes today, very, very choppy back and forth price action, even on the 15th. So that's obviously quite important to look at as well. All right. So of course today, BOE day. So BOE at 12, obviously looking at that. So if we look at our own economic calendar in here, there's quite a few interesting pieces of data as well. So if you're looking for more analysis, looking for more information, you can check the analysis tab. It'll bring up additional information as well in terms of previous meetings, in terms of decision percentages, etc. So that's also quite useful. So BOE at 12, looking for a 50 basis point increase, 7-2. So of course, if we start to see 6-3 or 5-4, that's going to be a dovish hike, and you're probably going to see that be a good thing for indices. Okay. Same again, the ECB, obviously voting members, that's going to be important as well. We're looking for another 50 basis points increase, but it's not just about the increase. We're looking at the broader reports. We're looking at the broader outlooks, commentary from the governors. So obviously President Lagarde of the ECB, and of course Governor Bailey in the UK. Those will be important outlooks as well. So they'll move markets in some way, shape, or form. But I suppose at this point in time, it'll be interesting to see, is there any sort of corrections against some of those moves yesterday, particularly in the likes of the indices there, like the Nasdaq, the Dow Jones, we've obviously seen top out. And of course, even those European indices, is there correction potentially coming in Europe? So European indices today might be the one to feature on into obviously the US Open. All right. So that's pretty much it for today, guys. We will be back tomorrow, and ladies, we will be back tomorrow for the NFP as well. We'll be doing a preview specifically on that, just to try and break up the information, not to have it too complicated or too over complex. And of course, if you feel like you want to obviously get involved in our community, feel free to reach out to us. Of course, we have our website, we have Facebook, all of our social medias as well. We also have Discord as well, which you can see down in the header below underneath this video as well. So click subscribe, make sure you get the notifications activated for these videos. And of course, we'll see you tomorrow for the NFP preview. Thanks, everyone.